This video is for informational purposes only and is not investment advice. What if contracts could execute themselves automatically, without the need for lawyers, banks, or any traditional intermediaries, revolutionizing how we handle agreements? Imagine a world where digital code handles it all seamlessly. Welcome to the world of smart contracts, which are self-executing programs stored on a blockchain that automatically enforce terms when conditions are met. Pioneered conceptually by Nick Szabo in 1994, they were first practically implemented on Ethereum, launched on July 30th, 2015 by Vitalik Buterin and co-founders. These digital agreements automatically enforce and execute their predefined terms as soon as specific conditions are fulfilled, such as a payment being received or a delivery confirmed, completely eliminating the need for trusted intermediaries like lawyers or banks in the process. At their core, smart contracts operate on simple if-then logic. For example, if payment is received, then transfer ownership, primarily written in the programming language Solidity and deployed immutably on blockchains like Ethereum. Once deployed, smart contracts are immutable, meaning they cannot be altered or changed in any way, and they are fully transparent, with every single transaction and execution recorded on the public blockchain ledger for anyone to verify. Consensus mechanisms like proof of stake, which Ethereum fully adopted with the merge on September 15, 2022, ensure tamper-proof and secure execution of these contracts. Although users must pay gas fees for the computational resources, typically ranging from 50 cents to $5 per transaction as of 2024. Smart contracts are revolutionizing the finance sector through decentralized finance, known as DeFi, by enabling direct peer-to-peer lending, borrowing, trading, and more, all without relying on traditional banks or financial institutions. Platforms like Aave, which launched in 2020, allow users to deposit collateral such as ETH and borrow stablecoins at competitive rates of 1 to 10% APY without any KYC requirements, currently boasting over $10 billion in total value locked as of 2024. Imagine sending money abroad instantly across the globe with minimal fees under 1%, a stark improvement over traditional services like Western Union, which charge an average of 6.5%, for example, transferring $200 overseas in mere seconds. Uniswap, launched in 2018, has facilitated over $1 trillion in cumulative trading volume through its decentralized exchange protocol, allowing anyone to swap digital assets seamlessly without centralized control. Beyond just finance, smart contracts are transforming everyday life across multiple sectors, from efficient supply chain management that tracks goods in real time to innovative real estate transactions and beyond. For instance, IBM Food Trust, launched in 2018, uses smart contracts to track food products from farm to table. Walmart pilots with it reduced traceability time from 7 days to just 2.2 seconds, enhancing safety and efficiency. Automatic payments can be triggered instantly upon delivery confirmation via IoT sensors integrated with smart contracts, streamlining commerce by ensuring payments and verifications happen without human intervention. In real estate, tokenized properties on platforms like Propy have enabled fast sales. For example, a $500,000 Florida home sold in 2017, cutting closing times from 30 to 60 days to mere hours and reducing fees by 20 to 30%. Even the insurance industry is evolving with parametric policies like AXA's FISI from 2017, which automatically paid out for over 1,000 flight delays in 2018 using Oracle data feeds from sources like Chainlink. Could your smart fridge automatically order groceries via a smart contract when supplies run low. The future holds exciting possibilities like seamless IoT integration for automated household tasks and purchases. Smart contracts are also impacting society profoundly, powering voting systems in decentralized autonomous organizations, or DAOs, like MakerDAO, which governs the $5 billion DAI stablecoin, and enabling automated royalties for creators. NFTs such as CryptoPunks from 2017 and Bored Ape Yacht Club from 2021 demonstrate this by automating perpetual royalties. For example, sending 10% of every resale back to the original creators through embedded smart contracts. The benefits are clear and compelling. Dramatically increased efficiency with 24/7 operations, trustless transactions without counterparty risk, and greater financial inclusion for the 1.7 billion unbanked people worldwide. However, significant challenges persist, including potential bugs like the infamous 2016 DAO hack that stole 3.6 million ETH worth about $50 million, leading to Ethereum's hard fork, as well as ongoing scalability issues with Ethereum processing only 15 transactions per second compared to Visa's 24,000. Regulation is also evolving rapidly to address these innovations, such as the European Union's MiCA framework effective in 2024, which aims to provide clearer guidelines for crypto assets and smart contract applications in this new technological landscape. From transforming finance with DeFi to revolutionizing daily transactions in supply chains, real estate, and insurance, smart contracts are reshaping our world and offering a compelling glimpse into a more automated, decentralized, and efficient future. This powerful technology promises to streamline complex processes worldwide, enhance security through decentralization, and empower individuals globally by giving them direct control over their assets and agreements. This video is for informational purposes only and is not investment advice. Always do your own research before making any decisions.
If you want more crypto updates, market analysis, and breaking news, hit the subscribe button and turn on notifications.